Okay, making friends. I'm going to keep this one short. Analyze investment centers using a balanced scorecard. What we're saying is, in this particular approach, again, we're trying to measure the performance of the investment center. We're trying to figure out, are we successful? Are we not successful? And the balanced scorecard is an opportunity for us to consider things beyond making just money. Okay. Obviously, there are aspects that we could use to measure the performance of an investment center. We could look at the income, we can look at the return on the investment, we could look at sales growth, our profit margins, residual income we talked about, investment turnover, all of the things those are really important, really important aspects of the performance of the business, but it's not everything, right? One of the things, let me back up. All of these things are non-financial ways to measure a business, right? So we could look at customer related issues. We could look at internal processes and innovation and learning, like how we're treating our employees. All of these things in the long run are going to make their way into the financial aspects of our business. However, in the short term, right, we could think about how we want to measure the business. We could first think about the customer experience. Are our customers happy? Okay. So if we have a restaurant and we are in the middle of nowhere, we need to make sure the food is really good and that the service is excellent so that customers will come back to us, right? We won't survive if the customer isn't having a good experience. Alternatively, we could be in the center of a tourist destination where we constantly have customer turnover, meaning somebody who comes into our restaurant, sits down and eats, they're not going to be back in the neighborhood for another 5 to 10 years, if ever. And so we don't really have to worry too much about the customer experience, okay? Because there's so much demand right in front of our business. So things that we would want to measure related to the customer, how many new customers do we have, right? How many one-time customers do we have? Repeat customers. How are we selling products to our customers? And are we selling add-on products to our customers, right? How long does it take in order for us to move from the time that a customer orders a particular service or product and when we deliver it? Okay. Are customers returning goods and services? Do we have a good customer service experience, right? There's all sorts of ways that we can measure the performance of our investment center based on looking at the customer experience. Okay. Then we can look at internal processes and we can think about, how do we reduce the number of defects, right? So is there a manufacturing process that I can put in place that will minimize the number of products that we send out to customers that are defective? How long is it taking us to make a product, right? How much does it cost for us to make a product? Are we being efficient with the labor that we're using? Are we being efficient with the machinery and equipment? Okay. But there are internal processes associated with making our products, and maybe we would want to measure the performance of those in a way to measure the overall performance of the business. And then, excuse me, how are we treating our employees? Are we providing training? Are we making sure that they have nice work-life balances? Are we creating opportunities for growth and advancement, et cetera, et cetera? So a balanced scorecard is going to take all of this information into consideration, not just the quantitative stuff, but sometimes qualitative factors as well.